That's the key. That's why I've been telling everybody to just trade with one micro in this market environment. If you watch the trade I did today, I had to sit there and wait through a deep retracement before I started pyramiding a second stage for it. So unless you have a lot of experience and you have a really good aptitude to use multiple models, I think it would better serve you to just do one micro and babysit that thing to completion and get your baseline experience through this difficult market. Today was kind of hard. I'll be honest with you. It was kind of hard, and it took a lot of focus for me to do this. You're not going to hear any kind of, I'm talking over the chart today because I was focusing and I had to leave the house for about 10, 15 minutes and come back. So there's no over the chart conversation. It's just, I'm sitting there looking at it, focusing. And there's a couple things you'll see in here, me annotating that I wanted to see it dive at one specific time. I wanted to see it do it quickly, and I had to weather a deep retracement, but it went back to an area where it made sense to me to add more. But someone that hasn't been doing it as long probably shouldn't be doing that right now. So what you're doing is the very thing I was warning you. If you did those things that you're trying to do in this market environment with not so much experience, you're building bad habits, you're building scar tissue, and you're retaining all these negative stimuli. And it's going to be a factor. Even when the markets clean up and gets a little bit better, you're going to have that trepidation. You're going to have fear. Oh, what if it does it to me again? And that's why I'm trying to tell you, all of you, to trade with one micro. You'll make all the money you'll ever want once you get good. But right now, you have to be disciplined, and you have to know what it's like to say, I want to do something else. I want to add something right now, but let's just put that as a paper trade off on an actual piece of paper and say, hypothetically, I would have done this, and then see what happens after that. But just manage to trade on that one micro. The one micro, and grow. All the students that are benefiting right now and having a positive learning experience and developing soundly and the right way, they're all doing one micro. Everybody that's adding more to it, they're complicating things, and they're bringing more outcome uncertainty to the exercise of developing experience when a market's really hard. So you're feeling exactly how you're supposed to. Don't beat yourself up. Just acknowledge the fact that, I should feel this way. It's good that I feel this way, because you want to be able to feel that also 20 years in the future, where you try to dabble outside your model to see how smart you are, and it stings you and it takes something from you. You're going to feel the same thing then. You're like, I should have never done that. But you're not going to kill yourself over that. You're just going to say, well, I learned from it. Let me not touch that again. Any of my students trying to short in this market right now is literally asking to have their head cleanly removed from their shoulders. So I don't want to give the impression that I'm trying to inspire all of you to try to sell short all-time highs. That I'm not trying to do. And if you go back to my old lectures, I've always been consistent with that. So of course, naturally, these people are going to say, well, why are you doing it? You're projecting the wrong message. No, I'm not. I'm projecting the fact that I know a little bit more than everybody else, and I'm just showcasing that. That's all I'm doing. But as a student developing how to do these types of things and trade, going long today would have been the easier thing for you to do. It would have been the easier thing to do. But you have to be aware of when it takes out buy side. If it's just making short-term highs, then there's another short-term high just a little bit above that, and it's pulled back, and another short-term a little high, and it's staying in a real small cluster of those highs above the buy side liquidity. And you can see what I'm talking about, because I literally map it out in the recording. When it's doing that, all-time highs or not, if there's something to the left that they've left untapped, and what it was doing this morning was just that very thing. It was teaching them to look at price and say, you know what, this is strong support. It can't even go down here. Or you listen to the guy's name escapes me now, but Mr. Candlestick, the wicks tell you that it's accumulation. No, it doesn't. It's building gaps. And you saw what they did. They went right down there into that area. So that big pool of liquidity that was engineered with those wicks, digging lower, and then finally moving higher, they're going to go for that. It's like a honeypot. There's so much interest to get it down there. And because they're selling short above buy side and every small little short-term high, that three drives pattern, that is real accumulation of shorts that will offset in that pool of liquidity and then down to the smooth lows I gave this morning. I heard that sentiment because I want to add just one little bullet point at the end of what you just said. I've done one stream where I've taken people up one at a time, and I can tell you it completely disorients me, and it's hard to manage, and I'm not good at it. So I'm thankful that Kit and whoever else helps him when he does these. It affords me a great deal of relaxation, so that way I can listen to the people that have a question, or if they have a comment or a concern, whatever. It allows me to be in a better state of mind where I'm not having to juggle all this stuff and who's coming up next and who's going to be, I don't have the patience for that, to be honest with you. I don't want to deal with all that stuff. So I'm glad that you show, and the rest of everyone else that mentions it too. The fact that Kit and whoever, I know he's had other people in the past help him out. So I like the fact that Pip Munch comes in. She's like a supporting actress in the whole thing. So that's wonderful that it happens that way. And if it wasn't like this, it probably wouldn't be so helpful, and I wouldn't be so willing to be participant in it, because I have help in doing it, and it allows me just to be myself and relax and have a conversation with y'all. I have the entire day broken down into different delivery mechanisms and scripts that it should follow based on things that I look for that tend to repeat over and over again. Today, if you watch what I did today, I was implementing some of that. And some of the things I was looking for, there was 2 or 3 things in there that didn't deliver as I wanted, but it was okay. It still kept the trade valid. But yes, if you spend time studying in your own, and don't expect to crack this real fast, or for most of you ever, but it's a wonderful study to go in and try to break down every single day. Once you get a model, once you know what you're looking for, the best thing you can do to make you a little bit more astute in reading price, and also having an expectation to what morning session should do, what London session should do, what Asia should do, or when Asia does something specific, what does that mean for London? And if that happens in London, what's it going to do for New York? So there's a lot of those things I've taught when I was teaching Forex, and they're like profiles and session profiles. All those things come together to a greater understanding about how you should sit still and do nothing, put your hands in your pockets, don't trade. Or I'm only going to be focusing on London because I think everything's going to be delivered there. The majority of the lion's portion of the move for the day will be in London, and New York will tend to either go sideways or have a retracement into what London was doing and make no further protraction beyond what was already posted in London. So yes, there is a lot of that stuff done in the Forex teachings. But if you go back and listen, I say those things segue perfectly into commodities, and they also segue into futures. A lot of you folks, you gloss over what I've said so many times in the earlier lectures. And when I was back on Baby Pips, they asked how long did it take for you to figure all this stuff out? I would have bits and pieces of it, and I'd say, I got it figured out. Just like when I make a video about something like the fair value gap or the silver bullet, everybody went out the very next day, tried to trade it with real money, or they tried to trade it with a funded account challenge, or they had their funded account, and they're like, I tried this and it's not working. I literally just taught it last night. You didn't spend any time doing anything with it. But I understand that excitement because I was doing the same thing. Whenever I saw something in price action, look here, I'm like, okay, I see that. And then let me see if it works everywhere else. And it was there. It was over here in this market, that market, palladium, platinum, copper, cotton, lumber even. Who the hell trades lumber? But it was appearing in lumber. So I was like, man, this is, I'm going to go out tomorrow and I'm going to trade with this. And boom, I'd hurt myself, lose real money. So I understand what it's like for you to feel like, I think I got enough to go out and just see what happens. And I messed around and I found out. So it didn't take overnight success with me. It took me literally 6 years of having pieces and then trying to put them in the real market with money behind them. And sometimes it worked. But when I tried it again, it failed because I was forcing something that I didn't fully understand. It just resembled something I thought I understood. And that's exactly what happens with students with my stuff. They watch it one time. They say, I looked at a couple charts over dinner. So I did backtesting, and okay, well, how many sample sets have you done? What's your stats that you got on? How many times did it work? How many times did it fail? What was the best drawdown? The lowest, in other words. What was the highest drawdown? What was the stop loss that you found that was economical for that model that you're working with. If you don't have those answers, you shouldn't be trading with real money. And I did that same stuff in the beginning. It took 6 years. And some of you guys cuss me out because you can't figure it out in the first 6 months. It's not normal. So you're saying you're still working on it in your 4th year? You haven't graduated college yet.
Yeah, 4 years.
You're working on a master's degree. Yeah, you're working on a master's degree. It's fine. Nobody goes out of, med school in the 4th year and starts cutting on anybody. You're asking for experience that you don't realize you get by doing what you're doing, studying, backtesting, and then tape reading. All those things come together and it gives you that answer to then you can explain how hard it is to someone that doesn't know how to do it. The answer is you've done enough of it. You got it as experience. There's no lecture. There's no, I wish I could do something as a teacher to make it so you only had to maybe watch a few videos, and be able to absorb it over the course of like 5 days and then simply know it. Because it's very frustrating as a teacher to know. I understand it's frustrating to try to articulate some of the stuff, but I know as soon as you start talking about a topic, I know where you're going with it. And then also I tap into that frustration because that's what's hard about teaching this. Because there are some things that no amount of lectures, no amount of me doing it in front of you, none of that stuff is going to help you get it. It's just you have to be looking through price action and seeing it, and it conditions you by experience and repetition.
Is there indications?
And then over time,
is there
you pick
indications?
Well, you were mentioning it. You were talking about how you were feeling like you're getting in sync with it, but it's like more than half of the way started. That's progress. There's a lot of students that have no idea how to recognize until it's done. I can see that market maker model now. It's obvious now, right? And the reason why they can't see it in the midpoint, what you're describing, if it's 60% of the time once it's in there, well, that's wonderful. Then you have the second stage distribution or accumulation, reaccumulation rather. You have the best of the model. So that's what everybody wants. Everybody wants that part because that's the one I like to be in. I can afford to not be in the first part. I can avoid the first part of the curve. I could avoid the hassle of being in there at smart money reversal because that's so hard to do. And then the low hanging fruit, or not low hanging fruit. I'm fatigued. I'm literally it's escaping me now. Smart money reversal, low risk short or low risk buy, and then first stage accumulation or first stage distribution, and then second stage, whether you're going long or short. That second one, that's the one that delivers real quick. It's immediate feedback. And what you're describing, if I understood it correctly, if you can see up to that point, then you should be very soon be consistently able to see the biggest runs in each one of the models. Runs by the same thing. So just know that the algorithm has not changed. It's just they're going in there and they're disrupting everything because they want you frustrated. They want you to make mistakes. They want you to get revenge driven, over leveraged, because all that's going to do is put more contracts in the marketplace. And stop listening to these people that tell you they're not going to come after your stop. They're going to come. They're coming for everybody. They're literally coming for everybody right now. So just have that in your mind and trade with the least amount of leverage and let your development take organic pathway. Don't rush it. You're on the right path. It just doesn't feel like that because you've been doing it for a couple of years and you don't see consistency yet. You're on the same path I was on. So the easiest way for you to fix what you're concerned about is giving yourself the flexibility and the permission to allow price to prove it to you efficiently and quickly, or you know what? I'll take a portion off right now, and I'll just bring my stop down. If it stops me out, I won't be mad, or I'll just close the trade here and just study the outcome, and don't get upset about if it goes through it. Who cares? You're getting experience, but you have to allow for imperfection in the beginning, and you also have to give yourself permission to be flexible. Sometimes the moves aren't going to happen. Sometimes they just aren't going to do it. And it may have all the things going for it where it looks like it should, but it doesn't. Are you going to throw away that idea of trading simply because you have a few of those a year? I would counsel you that would be a poor perspective, because you'll have more winnings following this logic than abandoning it. First thing you have to do when there's an emergency and you're bleeding out money and you're in drawdown is you have to stop the bleeding. You have to stop the hemorrhaging. So the first thing you do is stop trading. You have to give yourself permission to at least stop for a couple days. Because if you're angry, if you're hurt, if you are embarrassed and ashamed, all those things are triggers for us to go in and do something. And usually what we do is we reach for a bigger weapon, something bigger, something more blunt, much more sharper, much more higher caliber. And we translate that into bigger, more frequent trades to get out of that feeling. Because we equate that if we do that and we're able to clobber the market and pry the money that we've lost by our own actions away from the marketplace, that means that, yeah, it was just something that was temporary, but I'm still a warrior and I'm never going to be afraid of having this happen again, when that's not true. But that's the comeback story we tell ourselves. And I did that a lot as a 20-year-old. The first thing is stop trading. Do something else away from the charts. You have to distance yourself. And what that does, it reminds you that trading is not who you are. It's what you do. And if you keep yourself grounded for a few days, minimum 3 days, preferably a week. Some of you may require longer than a week. It's going to be hard for you to do that, but it's good medicine for it to happen. When you eventually get through that time away from whatever you arrive at for your, I guess, measure of discomfort, whenever you put something on yourself in terms of drawdown or struggling and you're getting frustrated, you're spending more time worrying about getting back to doing it right, and you feel like it's a race to get to it, that's not a time to go back into the marketplace. So you have to let that go. And by doing something like a different hobby, don't watch my videos, don't look at price action, don't go on social media and look what everybody else is doing. Prove to yourself that you have discipline to keep yourself away from it. If you can't do that, that proves that you're not equipped to go in and trade, because you're going to reach for the first thing that looks like something to trade on. And chances are it has nothing to do with making money. It's just something for you to distract yourself from the pain. It's distracting you from the discomfort of what you put yourself through. And you want to get to that realization that it was just temporary. When spending time away from the market, away from my content, away from the community, away from social media and the markets, you ground yourself and you realize, oh yeah, I am that same person before trading. I liked doing all these things too. I love my family. I love my friends. I love the hobbies that we did that were not market related. So yeah, I'm okay. I'm going to be okay if I don't go back there for a couple days. The market's going to be there. The concepts will still be there, but your frame of mind won't be where it needs to be to use them correctly unless you give yourself a break. And by grounding yourself like this, it allows you to come back with a fresh perspective. You're not in a vendetta mood where you have to go out and exact revenge on something, and you end up personifying the market. Just treat it as a very slow progress where you go back down to 1 micro and 1 trade per day. And do that for a couple weeks to get yourself back into the swing of things. And over time, when you get a little bit more acclimated to what it is you're doing again, and if you're not feeling impulsive, then go back to whatever you were doing before you hurt yourself.